Okay, well, we want to welcome you to our webinar today. We're just so happy you're here with us. Before we begin, I want to make sure that everyone can hear us and see our screen. So let us know by typing into that chat box if you're having any problems with the connection. We don't want a repeat of last month where I can see it just fine. This is the third and final in our winter lunchtime webinars that we've been presenting. Our goal is to provide you with information that is both useful and time-saving to you and your business. Today focuses on providing you with the reasons and options on choosing your business structure. They include issues on what impacts the different business structures, 4 of the most common business structures, and suggestions on how to get started with creating a business structure. Since we know your day is filled with a million things to do, we're going to try our best to stick to a no more than 30-minute webinar today. Again, we're just really glad you're able to join us, so let's get started. We always like to give you a brief introduction and an overview of who we are and what we do. So for those of you who don't already know us, here we go. My name is Pam Leverance, and I'm the owner of the firm Balanced Numbers Consulting Services. My business is virtual, meaning I can run it from wherever I am and wherever you may be located. I started consulting in 2009 on a very part-time basis, and I decided to make it a full-time venture in 2014. I have over 30 years of experience in the business world. I've held management positions in both the education and health fields, as well as administrative and accounting positions in the financial field. I held the elected position of tax collector in my town for nearly 13 years, which allowed me to use an entirely different set of skills. I became certified as a Connecticut municipal collector, which involved 3 years of classes and sitting for a state exam. I've been actively involved in my community since 1991, and I've held various positions including chair, vice chair, fundraising chair, and board member in various organizations. I really enjoy being part of a small community and making a difference in people's lives. In my business life, I really enjoy helping small business owners to get their businesses up and running, organizing and defining their roles and duties, and assisting them in managing their daily activities, such as with emails and calendars, basically creating a sensible work-life balance for them. My passion is to see business owners flourish by giving them needed support in vital areas, including workflow, productivity, and back office processes. I love to help others, and I truly care about their success and getting them organized and comfortable in their business operations. When I'm not working, I spend most of my time with my family, including my 5 little grandkids and my husband. As a rule, I set aside Sundays to be with my family. I firmly believe that family is the heart of my being, and I love to live life through their eyes. In my spare time, I love to read, bake, hike, and dabble in photography. Of course, traveling is near and dear to my heart, and I love to explore new places around the country. Last fall, I did a 30-day road trip and explored places like the Grand Canyon, the Painted Desert, and the Smoky Mountains. But enough about me. Now here's Dee to tell us more about herself.
Thank you, Pam. Hi, I'm Dee Berkschneider, aka Virtual Dee. I'm a creative admin guru that helps small businesses and entrepreneurs in all phases of their business. My goal is to assist my client with day-to-day tasks and help them check things off their to-do list so they can focus on growing their business. My specialty is administrative services, graphic design, HR, and operations management. I bring over 15 years of experience as a small business owner with a hands-on operation to my clients. As a former UPS store franchisee, I grew a business from the ground up, starting at 0 customers and 0 sales. I survived a corporate buyout that yielded a brand change for my business, a business relocation of my store, the recession of 2008, and a storefront rebuild after a car drove through it. I held a seat on the board for the local Chamber of Commerce for 6 years, with my final duty as the chair of the executive committee. I've served on the United Way board, volunteered as a parade coordinator for an annual town festival, and helped organize several annual charity runs. I'm a self-starter, determined, detail-oriented, task-driven, and love to help customers. I strive to not only meet but exceed my clients' expectations with a customized approach to helping them meet their goals. In my spare time, I'm a wife and a mother of 2. I love to golf, run, hike, and seek new adventures with my husband and children. The most important things in life are to teach my children by example, to live, laugh, and love, and have an occasional fun day at the beach.
Awesome. All right. So Dee and I are both beach lovers.
Love.
And for those of you who don't know, Dee and I have been doing these webinars for almost a year together. And I like to call each other, our little team is like peanut butter and jelly, or a lot of times it's like Lucy and Ethel.
More importantly, the visual of the chocolates on the conveyor belt system.
Absolutely. All right.
We do enjoy working together on this this adventure. I appreciate the fact that you reached out to me a year ago and asked me to come along with you on this venture, because it has been truly a learning experience and something that I thank you for on a daily basis, Pam.
Oh, well, thank you. I enjoy sharing this with you as well.
Yeah.
All right, so we're going to talk about the issues that will impact your business structure. And when starting a new business, it's important not to miss any step. So what we're sharing with you today is by no means intended to serve as legal advice or financial advice. Please consult the appropriate professional for detailed information. When setting up a business structure, choosing the right structure can be critical to the success of your company. Not only will this decision have an impact on how much you pay in taxes, but it will affect the amount of paperwork your business is required to do, the personal liability you face, and your ability to raise money. In our last 2 webinars, Dee and I went over how to turn your ideas into a business and how to write a business plan. The next step is bringing your business to life, and that means choosing a business structure that will be right for you. There are 3 professionals that a business owner needs early on: an attorney, an accountant, and a professional, knowledgeable assistant, or what I like to call the right arm of your business, because that person will not only assist you, but will keep you organized, which is an essential element for success. Choosing your business structure is not something to take lightly. You should sit with your attorney and go over the pros and cons of each type and how they would apply to your situation and concept for how you'd like your business to be set up. Take the time and the money to get the expert advice from the attorney. I can't stress this enough. There is also a lot of good information that you can get from the Small Business Association and also the Service Corps of Retired Executives. Utilizing all these resources can be invaluable for your business. An accountant can also be considered the backbone of your company, because a good one will be a mentor for you. What I mean by that is that a good accountant will not only keep your books and prepare your taxes, but they will assist and guide you on financial decisions that your business will need to make. Lastly, your assistant will keep you on track and on top of deadlines, project needs, management tasks, and also be someone you can bounce ideas off of. As you think about your business structure, keep these important things in mind: the different types of liabilities that come with each business structure, the expenses and procedures associated with establishing and continuing to run the various business structure, income tax, and also investment needs, including loans and grants. All right, and now we're going to get into the four most common types of business structure. And the first one I'm going to talk about is the sole proprietorship. This is the simplest business structure there is. There is only one owner. Even if you never formally set up a business with your state, you are still operating a sole proprietorship, and this is completely legitimate. There are no papers to file and no fees to pay in order to set up a sole proprietorship. You are the sole owner of your business, and you simply have to begin business operations in order to create your sole proprietorship. If you are in business for yourself and haven't yet created a formal business structure, then chances are you're already a sole proprietor. In terms of the legal entities involved in a sole proprietorship, you and the sole proprietorship are the same thing. This means that you will pay taxes on any business profit as income on your personal taxes, and if your business has any liabilities, like a court judgment or a past due debt, you are personally liable for them. If you choose this type of business structure, the legal name of your business is your own name. And in most states, if you want to operate the business under a different name, you'll need to file for a DBA, or a doing business as. There is a major downside. As a sole proprietor, there's no distinction between the owner and the business. This means that all of your personal assets are at risk should your business be sued or can't pay its bills. That's a huge risk to take. As a general rule, a sole proprietorship can work well for some part-time freelancers or for those of you who are testing the waters in your very early stages of your business. If you are planning on delivering a product to a customer or a service to a client, you should take into consideration the personal liability aspect of this setup and perhaps take a look at one of the more formal business structures. Your accountant will probably advise you that, even if you are running a sole proprietorship, you should have a separate business bank account to keep your personal and business income and expenses separate. This is a fact that a lot of people overlook. As far as taxes go for this type of business structure, they flow through your personal tax return and include completing a Schedule C as well as a Schedule SE to calculate self-employment tax. In addition to paying self-employment tax, you will also be responsible for making quarterly estimated tax payments. Ask your accountant for guidance on how that will be done. It's quite difficult to raise capital for this type of business structure. There are no partners, shares, or membership interest in a sole proprietorship, so it's generally difficult to attract investors without changing your type of business structure. The second one I want to talk about is the limited liability company, which is known as the LLC. This is a fairly easy and very flexible way to set up your business. The key benefits of the LLC is that it helps to protect the personal liability of the owner while keeping the corporate formalities to a minimum. As an LLC, you will typically be required to file an annual report each year with the state and make sure you keep your business and personal finances separate. This is because the LLC is a business entity created under state law that combines the characteristics of both a corporation and a partnership. For tax considerations, the LLC is generally treated as a pass-through entity, meaning profits and losses are passed along and reported on the owner's personal tax returns, generally using that Schedule C. If your LLC loses money during its first few years, which is most often than not typical, you can apply your percentage of the loss to your personal return. The percentage meaning what percentage of ownership you have in the business. And this helps you reduce your personal taxes. In other words, an LLC that has 2 or more members is automatically taxed as a partnership, and an LLC with 1 owner is taxed as a sole proprietorship, unless the company files documents with the IRS requesting a different kind of tax treatment. Ask your attorney and your accountant for details on taxation. The major downside of the LLC is that it doesn't have stock. You can give out membership stakes in the business, which are similar to stock shares, except they aren't separate classes of membership stakes with an LLC. Also, if you're thinking about giving employees equity in the company, the LLC setup can be difficult. The problem is that members own 100% of the LLC at all times. So in order to give equity to someone new, an existing member would need to sell or give their ownership to that new member. This can make things much more complicated than just setting aside shares of stock, as with a corporation. The main reason you would want to organize your business as an LLC is to shield yourself from any personal liability that may arise from your small business dealings. An LLC provides limited liability to the owners of the LLC, including debts, judgments, and other liabilities. Organizing your business as an LLC makes sense for 2 reasons. First, if the business is engaged in more risky activity that makes it more likely to be sued, or if the business has the potential of racking up large amounts of debt, then an LLC may be a good idea to shield its owners from personal liability. Second, if any of the owners of a business have large amounts of personal assets that they want to shield from any potential liability associated with the business, the LLC is a good option. Keep in mind that there will be paperwork to file and fees to pay, but less so than with a corporation. Make sure that you discuss that with your attorney and your accountant. You will need to file articles of organization with the Secretary of State in the state you intend to do business, and it's also a good idea to file an operating agreement. And although you are not required to file for an EIN, which is an employer identification number, unless you have employees, some lenders and banks will not conduct business with companies that don't have EINs. So it's a good idea to add that simple step into your procedure when forming an LLC. And now Dee's going to talk about the corporations.
Thank you, Pam. In my research, I found the following definitions for a C Corp and an S Corp from the IRS website. A C corporation is a standard corporation. It is a separate legal entity owned by shareholders and is formed by filing documents, articles, or certificates of incorporation with your Secretary of State office and paying the appropriate filing fees. This structure limits each owner's personal liability for the business debts to the amount invested by that shareholder. A corporation conducts business, realizes net income or loss, pays taxes, and distributes profits to shareholders. The profit of a corporation is taxed to the corporation when earned, and then taxed to the shareholders when distributed as dividends. This creates a double tax. The corporation does not get a tax deduction when it distributes dividends to shareholders, and shareholders cannot deduct any loss of the corporation. Things to take into consideration to determine if this might be the right type of business for you is your future financing, your needs for flexibility in profit sharing and earnings distribution, needs for employee benefits, including health and medical, education, life insurance, travel, etc. Your needs for having the ability to easily sell your business. And also whether or not you're going to offer stock options to your employees. And lastly, if you foresee real estate ownership in the business's future. S corporations are corporations that elect to pass corporate income, losses, deductions, and credits through to their shareholders for federal tax purposes. S-corps are still required to file a corporate income tax return, but no tax is paid at the corporate level. Shareholders of S corporations report the flow through of income and losses on their personal tax returns and are assessed tax at their individual income tax rates. This allows S corporations to avoid double taxation on the corporate income. S corporations are responsible for tax on certain built-in gains and passive income at the entity level. To qualify for S corporation status, the following requirements must be met. You must be a domestic corporation. You have only allowable shareholders, those being individuals, certain trusts and estates, and shareholders may not be partnerships, other corporations, or non-resident alien shareholders. S corporations are limited to no more than 100 shareholders. They have only one class of stock, and they cannot be certain ineligible corporations. For example, certain financial institutions, insurance companies, and domestic international sales corporations. S-corp status is obtained by meeting the above requirements along with filing an IRS Form 2553, an election by a small business corporation. Things to take into consideration to determine if this might be the right type of business for you is if you want to take advantage of benefits of the corporate business type, but also want the advantage of the pass-through income. You need flexibility in employee salaries, and you want flexibility in accounting methods. Certain criteria require an accrual accounting method. There are definite similarities between an S-corp and a C-corp, and there are also several differences. C-corp is the standard corporation, and an S-corp has elected a special tax status with the IRS. They are both limited liability protection, meaning shareholders and owners are typically not personally responsible for business debts and liabilities. They are separate legal entities created by estate filing and fees. Forming docs can be filed with the state in the articles of incorporation or certificate of incorporation. The structures both consist of shareholders, directors, and officers. Shareholders are the owners, and they elect a board of directors who oversee the corporate affairs and decision-making, but are not responsible for the day-to-day operation. And the directors elect the officers to manage the daily operations. And then they're similar in their corporate formalities. They're both required to adopt bylaws, issue stock, host shareholders and directors meetings, file annual reports, and pay annual fees. One of the main differences between the C-corp and the S-corp is taxation. C-corps are separate taxable entities, while a corporate file a corporate tax return and pay taxes at the corporate level. You could face possibility of double taxation if income is distributed to business owners as dividends, which is considered personal income. Tax on corporate income is paid first at the corporate level and again at the individual level on dividends. S-corps are pass-through tax entities. They file an informational federal tax return, but no income tax is paid at the corporate level. The P&L is instead passed through the business and reported on the owner's personal tax return. Any tax due is paid at the individual level by the owners at the owner's personal tax rate. C-corp has no restrictions on its ownership. You can have multiple classes of stock as well in a C-corp. An S-corp is restricted to no more than 100 shareholders who must be U.S. citizens and residents. S-corps cannot be owned by a C-corp or other S-corps, LLCs, partnerships, or many trusts. And S-corps can only have one class of stock. As always, in advance to making your decision on your particular business structure and what works best for you, you should hire an accountant that you trust and seek legal counsel. Today we have also put together a few free resources for you to seek out in your search for the proper business structure for you. We're sharing a few resources with you today that are good tools for research and educating yourself on your particular state requirements. The first one is the SBA, which stands for the Small Business Association. This is a government agency that assists small businesses getting started, from loans to counseling and other forms of assistance. Next is SCorp, the Service Corps of Retired Executives. This is a nonprofit organization that provides free workshops, seminars, and business mentoring services with retired executives to entrepreneurs in the United States. You will also want to seek out your Secretary of State office for guidance on your particular state filing fee structure for your corporation, along with your requirements when your state annual reports are due. And lastly, research your State Department of Economic Development. This office administrates a wide variety of services and programs designed to enhance your state's economic growth, including statutory requirements and workforce development.
Excellent. Thank you. All right. Well, the points to remember, there's a lot of them. We covered a lot of information in today's webinar. It included 3 professionals every business owner needs: the assistant, an accountant, and an attorney. Considering the future of your company, remembering that laws are subject to change from time to time, so stay on top of that. Utilizing the resources, and also remember there's a handout today that will help you with that. They're all listed there. Reviewing your business structure every year, and don't forget to ask for help along the way.
Building your dreams will be rewarding, yet hard work to get off the ground. There are pieces of startup of your business that you will need assistance with, including your business structure. You don't need to be an expert at everything to be an entrepreneur. So having a virtual administrator, such as Pam or I, to help you through the parts that you aren't certain of is important. We are highly skilled and specialized entrepreneurs, just like you, that can help you with research, your business plan, your business structure, or even goal setting. Once you are up and running, we can help you with the day-to-day office admin work and keeping you on track. You can trust us to do your busy work and keep track of details so you can focus on sales, growing your business, and client leads. Consider us a source of energy that will keep you on task and keep you focused. With all that you have to do on your to-do list, we can help you with the beginning parts of your concept all the way through to creation pieces of your business plan and beyond.
Absolutely. All right, good stuff. Well, that concludes today's webinar. We hope you now have a clearer understanding of the types of business structure. I know it's probably not the most interesting topic, but we tried to make it as fun and interesting as possible. Remember to reach out for help if you need it. Don't forget the handout. That's your free gift for attending today, the business structure handout. And what else? Oh, please join us for our next webinar. That's going to be on Tuesday, April 11th. Topic to be announced, so stay tuned for that. And we always like to end our webinars with a quote. And the one that we had come up with for this series is, "Life isn't about finding yourself. Life is about creating yourself." You'll see our contact information on this screen, and don't hesitate to reach out to us if we can help you or answer any questions. And thank you so much for attending.
Thank you.